How we doing, traders? Welcome to the first ever stock market movers. As we go ahead and jump on in, this is where we cover the top market headlines. I'm your host, Money Mitch, and if there's a stock that you want covered, throw it up in the chat and I'll make sure to go ahead and get to it. On today's show, we're going to talk about CPI data. We'll hit some earnings. We got a guest on oil. We'll talk also about Nvidia and some tech stocks. And of course, the market continues to drop fast. Stick around, guys. Let's go ahead and get it started. Welcome to Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now, we all know the bull market is here to stay. Money Mitch.
How we doing out there, traders? I hope that you guys are making it through a little bit of the what? The red action. Yes, it's a red light alert out there this morning. And now we're in the afternoon, not the morning, but we'll get it right here. As you guys can see, of course, we're seeing some red out there, and a lot of this has to do with the SPY action. And of course, what was today all about? The CPI reaction. That's what all investors were looking at and looking towards to see. Let's talk about that, and we'll dive right into the SPY here. As you guys can take a look, the SPY is down significantly on the day, and all sectors are down on the day. We'll talk about the sectors coming on up, but first, let's take a look and a deeper dive into what happened there with the CPI data. If you take a look, economists surveyed by Dow Jones were expecting 8.3 year over year in May. That would be the same as it was in April. And that was the expectations. The expectations were also that core inflation would have cooled slightly. And so this was really on investors' eyes, because core inflation could give us that sign that, yeah, we're seeing that topping. Of course, core inflation of this core CPI, meaning that the measure with energy and food excluded. So outside of that, how's the inflation? We wanted to see that start trickling down, and then eventually you might see energy and food start giving up some of that inflation. That's what investors had their expectations. And like always, when expectations aren't met, that's when we're going to see the biggest stock reactions. So today we got a reading of what? We get a reading of 8.6. So this was 0.3 off. It came in a little bit hot. Doesn't mean that it was an extreme number here, because we're not talking about anything crazy. Came in at 8.6, but this does mark the largest 12-month increase since December 1981. Saw that stat, and I'll give a shout out at least. That stat, it was given out by CNBC. But one thing that I'll tell you guys is, we were going to look at what? At core inflation, right? And core inflation actually increased 0.6. And the expectations were that it would rise 0.5 or 5.9% year over year. And what did we get? We got the same number that we got in April, which was 0.6. So not showing that topping effect that they were looking for. And I think this is really important when we come and take a look at it. You know, inflation increased over 1%, and now we're talking about shelter, gasoline, and food, after only rising 0.3% in April, showing us more inflation. And so with this being said, inflation was the main question of what? It was the main question of how the Fed were going to attack here. Do they still need to attack inflation? A lot of people were taking a look to see if, okay, so what happens if inflation starts showing a turn, and then the Fed stop getting so dovish and they start, getting to the point where they're not talking about 50 basis point hikes. And this more along confirms that. If you looked on Thursday, it was about 70% chance that we'd get a 50 basis point hike. And now you're seeing what? Continued weakness in the market. And it wasn't just in the overall market. Where did we get hit the hardest? I think that's very important to know. So let's start taking a look at what I like to do, which is a little bit of sector industry analysis. This is what we're going to do a lot on this show. We're also going to be bringing on some great expert opinions. What I mean by expert opinions is the analysts that you guys want to hear from. Today, we'll be getting into some great interviews. We got 2 interviews coming on up. We'll be getting into first some oil with Matt Smith, the lead oil analyst at Americas at Kpler. And of course, stick around for Ivana. She'll be talking about, of course, we'll talk about some tech with her. We've done this before on Money Mitch. And stick around, guys. She is a portfolio manager for the actively managed SPRX Alpha ETF. You guys can check that out. That's SPRX. We'll get into that coming on up. That's going to be at 1:45 and Matt Smith at 1:15. So we got about 7 minutes till we talk a little bit about oil. So let's go ahead and take a deeper dive. And what do we see out there in the market today? And where was the weakness, right? And so I always like to pay attention to this because rotation. If we take a look here at what's getting hit the hardest here, at least overall on the day, you're going to see technology. Technology is getting hit the hardest. And what are some of these leading names? Well, let's go ahead. Let's take a look at some of these stocks that got crushed here. And so the leading industry that is down is software application. Then you got software infrastructure, followed by semiconductors and equipment. So a lot of sectors down, software application getting hit the most because why? Because those are the stocks that have a lot of that forward-looking PE. Let's go back to the blue light. I don't like too much of this red. Hopefully we change it on up. Smash the like, guys, if you guys are enjoying the information today. I'm trying to get through all of it. I will catch up with the chat right now in a second. I know that you guys are over there just chatting it on up, and I appreciate you guys joining us today. This is going to be a brand new show where we're going to keep pushing through the headlines and get through a lot here. So you can see the sectors, technology really getting drilled down here. Apple getting hit hard. Microsoft getting hit hard. Google getting hit hard. Meta down 4.7%. And we did get news on Meta. And what were they talking about? They canceled 2 products. They canceled now their AR glasses. And you can see that Meta is really struggling right now with their products. They're not being able to get them out. There's being negatives, catalysts just continuously coming out from this company right now. We need to see if they turn this around. But as of right now, everything points to the downside. NVIDIA down 5.46%. We'll get into that a little bit later here as we talk with Ivana. But stick around to hear what she has to say about NVIDIA. I know that she will definitely be paying attention to it. All right, let's go ahead. Let's take a look here at some other stocks. You're seeing Adobe down big today. You're seeing CRM down big today, actually off of the VWAP right now. We'll talk a little bit more about trading kind of as we do it, but this show's about the headlines. So let's get into the next headlines that we want to talk about, which are some earnings. So let's get into first Docu. Docu's earnings came out yesterday here, and it did take a hard hit in the after hours. Now going a little bit sideways, but starting to show a little bit of weakening. It's down 0.5 cents now, at least from the open. We'll see if this can continue on the downside, but definitely taking a hard hit here. And they missed here at EPS adjusted at 38 cents, missing the 46-cent estimate. And the estimates here, the sales at least beat here at 588.7 million. Beating the 581.76 million estimate there. So a little bit of some strength, a little bit of some weakness there in Docu. But as you guys can see, at least into the open here, it hasn't really given too much of those kind of, well, it hasn't made up too much of those losses back, but it also hasn't increased too much here, kind of just going sideways. We'll see where Docu ends up on the day. Like always, you guys can catch that on at the close. Let's go ahead. Let's continue going. Let's go into Stitch Fix here. Let's take a look here how this is performing after giving some not the best earnings here. They were expected a loss of EPS here at 72 cents. And they missed the 55-cent estimate here. Sales were at 492.9, missing the 493.26 estimate. And so Stitch Fix, man, will this stock ever catch a break? I just don't I wouldn't be the one to at least call it at least. Right now, it's heading down way below any lows that you can see on the map. And this goes back into 2017. So Stitch Fix definitely needing to change it on up, do something to change it. And right now it's down there towards 650s. Let's take a look at the 15-minute. And you can see that it went sideways, but still looking like it wants to come and break down. So we'll see what happens with Stitch Fix, but definitely not pointing towards the upside, at least at this moment. All right, so that's going to do it for our earnings stocks today. But definitely, guys, today, where can we at least find some pockets of strength? Let's look at the consumer defensives to see if we can find some kind of strengths on out there. And you can see tobacco stocks up a little bit. And so there you guys see at least a little bit of a rise here in tobacco. BTI also having a decent day. Let's take a look. Grocery stores. Which grocery stores are up? We got Go up a little bit here, and Go Chinese stocks. All right, how are those doing? How's Baba? All right, so it's coming on down a little bit there after we've been seeing these kind of start coming on up here. I've been paying attention to see what would happen with the Chinese trade if we were really starting to get some strength here. You can see PDD a little bit stronger here, up on the day, but still not holding too much of the gains. But relative to the market, these are actually doing pretty decent right now. In a second, we're going to be getting into some oil. So let's take a quick look at how oil is performing right now. As you guys can see, ExxonMobil pulling on back today. I drew this longer term trend line that I was really trying to keep an eye out on to see if we were able to hold it on the pullbacks. And I talked about it today that I was looking for potentially a pullback around this 9 EMA level where we could hold maybe slightly below the 100 level and then maybe look for another push back towards the 105s. We would talk about that on pre-market prep. And now that we're seeing this pullback, I'm going to look for this trend line to keep holding here in ExxonMobil to make sure that we don't break too far from that 100 after we just recently passed through it. We could take a look at, of course, some other players here like Chevron also doing kind of a similar move. If you take a look here, you'll find a trend line that you can draw on up here. It's going on up there towards that 174 level. We'll look for that to kind of hold, if not the closing high from over here on this push. Around 170 is where we can look for the downside action if we're looking towards a little bit of a pullback right now. But, of course, what better way to talk about oil than go through it with the experts? And that's really what I want to do here on Money Mitch. It's not just only about what I see technically. It's not only about what we find in the headlines, but we want to bring on some experts that definitely know their industry and are able to speak about it, better than I am. I watch a lot of stocks and a lot of the stock market, but I'm not going to consider myself an oil expert. So I went to the oil experts to bring them on here. Let's go ahead. Let's bring on Matt Smith. This is the lead oil analyst from the Americas at Kpler. Let's go ahead and bring him on here. How we doing, Matt?
Doing great. Thanks, Mitch.
Welcome. I got to say, I like the suit. I like the setup.
I wanted to make an effort, so make a good impression.
You're looking good. I like the beard too. Beard all the way. Let's get it going here. Let's talk a little bit about oil. But first things first, I know that you probably saw the CPI data. Maybe it's not on the top of yours, but of course, you pay attention to it like all of us. What did you think about the CPI reading?
It was higher than people thought, right? But it was always going to be pretty strong. At the same time, too, as well, you've got that kind of headline number, which is being led by food and energy particularly. So that's why you saw that higher than the core number. But yeah, you can see just with the market reaction to that, really just the expectation of what the Fed is going to do next week. That's really driven, the US dollar to be super strong. And given the inverse relationship that you have with crude, that's really pressuring crude down. But I think we're really moving lower today just because crude is getting swept up in the contagion that we're seeing across markets here. So as you see, the NASDAQ down over 3% or that, you're going to see crude being pulled down with that negative kind of risk appetite too.
Definitely no. So I have to start asking, how do you feel about the incoming months and as the market wrestles here with the strained supply chains of Russia and their attempt to shift oil exports away from Europe here?
Yeah, and I've got to say, I've been speaking to a number of people in the last week or two, and I feel like I'm like the bearer of bad news, because that's kind of what I'm giving here. Is like from a US perspective, in terms of gasoline prices at the pump, they're likely to be maintained here and push on higher as we go forward in the coming months. The reason for that, and you alluded to this, is because of oil prices. You know, that's the key driver of prices at the pump, and we're seeing oil up close to $120 a barrel. The reason we're seeing so much strength in oil is, if you look at WTI, that US benchmark, we're actually up sort of over 50% from the beginning of the year. Back then, to start the year, we were below 80, and now we're up at 120. So some real strength there, predominantly being driven by the situation with Russia. The thing is, though, we're not actually seeing the real impact of Russian barrels being taken off the market yet. There's a number of other factors at play here. But as that happens, and Russia is one of the reason Russia is so important is because they're one of the leading oil producers in the world. And so taking a material amount of barrels off the market at a time when we're rebounding in demand because of the pandemic, we're coming out of that, all these elements mean that the prices are likely to move higher from here, even though we're already at multi-year highs.
Yeah, and so I've started to take a look at it, and I kind of wish that I didn't look at the 120 price. When we were at around getting towards the 100, I was calling that, with this situation, I could easily see 120. And now we're really starting to get to that point where we might fight the all-time high there, just shy of $150 a barrel set in 2008. Do you see kind of what I'm seeing too, Matt, that we're heading in that direction?
Yeah, not wanting to fearmonger or anything like that, but you have kind of all these dominoes kind of lining up for that to potentially happen. In that, yes, the Russian barrels coming off the market, but at the same time too, you have OPEC Plus, who are essentially the swing supplier of the market, that are expected to put more oil onto the market when prices get a little bit too racy. But this time around, they've already been increasing production over the last year or so to after the pandemic really saw them take oil off the market as prices crashed and demand crashed. But now they're really struggling to put more onto the market at a time when it is really needed. And it's still, we're at 100 million barrels a day of demand. You've got the US, which is somewhat struggling to increase production at a really strong rate, like we would have seen perhaps 5-6 years ago. And so it's not just Russia, but it's these supply side concerns from various factors, which is really supporting oil here. So as we look ahead, demand is looking like it's going to continue to grow. We're hitting peak summer driving season in the US here in a couple of months. And so you see refineries really ramping up and demanding that crude. That's not just isolated in the US. We have China coming out of lockdowns as well. And so there's demand side strength there too. So the mix of the supply side weakness and the demand side strength is a real concern. And that's why, I kind of side with you. We may just see a slow grind higher here in terms of prices. Obviously, we have blips like today, but it just feels like there's no real reason to be selling crude off strongly right now.
Yeah, I definitely would have to agree with that. And we recently saw, you just mentioned it, OPEC Plus announcing kind of the bigger boost in oil production this month. What really needs to happen here to relieve the supply constraints?
I'm not sure that there's anything that can be done aside from the Russian situation, because you've got OPEC Plus. You have Saudi Arabia, who's already exporting about 7 million barrels a day. If they're not incentivized to export more barrels at $120 a barrel, then nothing's going to incentivize them, And yet they're still not, them and other members of OPEC are still struggling to put more oil onto the market. So that really kind of indicates the supply side issue that we have here. The fear is that then the only way that we do see prices come low is from demand destruction. But then again, we're at $5 on the national average here in the US, many states paying just above that. And we've all been pent up for the last couple of years, and so a high price at the pump is unlikely to stop us hopping in the car and going on a road trip this summer. And so I think that we're not likely to be we'll see a modicum of demand destruction. We're already probably seeing that, but I think that's also the changing dynamics because of the pandemic. So you have the ability now for people to work at home if they have that choice. So we're seeing maybe that play into the numbers a little bit, but it feels like we've got to push to the point where we really start to see demand destruction. And that could be, $5.50 a gallon, maybe even $6, something like that, which is, pretty scary to think about.
Yeah, it's pretty scary. I'll tell you one thing. I just moved across the whole United States from Colorado to North Carolina. So you could just imagine, Matt, yeah, it was scary at the pumps every time. But one thing that I've noticed, and you can allude to this and let me know why, but the OPEC countries just can't seem to ramp up the oil production to even meet the quotas that are getting put out there.
Yeah, that's it. So you mentioned the bigger increase that was announced, and it feels a little bit like lip service more than anything else. You do have off of West Africa, sort of a Nigeria, Angola, who haven't been able to increase production anyway, just because there's been that lack of investment over the last few years. Even when you're looking at a Saudi Arabia or a Kuwait, just as we have demand in the summer for summer driving season, in Saudi Arabia, they divert their crude and use it domestically for direct crude burn for power generation, because the temperatures there are already kind of 120 degrees, something like that. And so they may be keeping production held up, but they're not pushing onto the global market. And that's where it needs to go via those exports. Same time too, as well, Kuwait has one of the largest, I think it's going to be the largest refinery in the Middle East, starting up in Kuwait like right now. And they're going to, again, feed that with their own crude. And so that's going to keep more off of the global market. And so with the best will in the world there, they are trying to push more onto the market, but it's just still a struggle. So, yeah, it's a quite predicament.
Yeah, I've heard, mentions of maybe during the pandemic and when the demand went down that they just, haven't been able to keep up the facilities. Is this really what you're also seeing, Matt?
In the US, it's a number of different reasons. And so first of all, shareholder pressure. So, they want, the shareholders want these monies returned rather than invested
That happens.
into more production. And so like a cash cow, basically. At the same time, too, just so you're seeing is in many different areas of the economy, there's labor shortages as well. And so they're struggling to get people to move the equipment, to do the drilling, etc. There's also equipment issues. There's also material issues as well. There's a lot of sand used in hydraulic fracturing in the US, and that's running short. Steel pipes as well. So all of these things are really providing headwinds to US production. And elsewhere, it's the same situation, right? Like whether it's Europe or that, they had that more environmental pressure and wanting to pivot to renewables. And so across the world, you're really starting to see that shift away from investment into the fossil fuel industry, while demand isn't quite pivoting yet.
Exactly. That's one thing that I know. I've been watching how the EU has been talking about how this is maybe ramping up more talks of renewable energy, but this just kind of shows me more and more how we're still reliant on oil. And so definitely, I'm sure you can point to that, Matt.
Yeah, exactly. And so even with Europe, well, first of all, in the US here, we are using natural gas as a bridge fuel to a renewable future. In Europe, really, after the Fukushima disaster, the nuclear disaster in Japan in 2011, they really kind of pivoted away from nuclear and went straight to renewables, which is great for a certain percent of the time. But on those days where it's maybe not windy or sunny or that, then you have that dip. And so it's like this from feast to famine in terms of that supply. And so you do kind of need that base load in place to meet those needs when you can't pull on solar or wind. And so that's what has happened. And then you have a situation with Europe where they were also pulling in 40% of their natural gas needs from Russia. Now, should they have been doing that? No, but it was cheap and it was plentiful. And because of that, economics drives everything, and so they weren't incentivized to pivot away. In fact, they were incentivized to take more, and that's why they've got into the situation that they're in, because of that huge reliance upon Russia. But here in the US, the movement is underway. Don't get me wrong, in terms of the renewable side of things. Even from an electric vehicle perspective as well, it's low penetration rate, but you drive around in North Carolina and that you'll see more Teslas than you did last year, or that will coming from Colorado. You probably saw a good amount already. So that is happening, but it's more kind of a creeper effect from a very low base.
Well, just wanted to say thank you for coming on. And sometimes, it doesn't be the best, but you are the first person on this brand new kind of rebranded show that we moved down from 4:30. So I wanted to tell you that I appreciate you coming on, Matt, and we'll definitely come back to you for some other expert opinions on oil sooner than later.
Perfect. Thanks so much, Mitch. Appreciate it.
Thank you, Matt. All right, let's go ahead. Let's continue. That's what it's all about here on Stock Market Movers, is getting towards the expert opinion so that you guys can continue with your informational edge where other than right here on Benzinga. Let's go ahead. Let's keep it going, guys. Let's talk about some stock movers on out there and what's going on. If you guys got a stock you guys want to check on out, this is your time now. Throw it up in the chat. I'm taking a look. I see Jar Jar out there. Dustin, Super SPAC, man. You guys are keeping it going there in the chat. Definitely appreciate you guys. George Santana, Jonathan Loves, and this is the show where you guys matter. So go ahead. Keep throwing up in the chat. Let's keep things going here. All right, let's go ahead. Let's take a look at what's going out in the market right now. And if we got any change, let's take a look. Of course, we want to take a look at the SPY to see if we're seeing at least a little bit less of leakage. There you go, getting a little bit of a bounce here up there towards 391 from a bottoming action around 390s. Now we can see here some clear definition of some bottoming action in this price zone. So we'll see if we break that during the show. But right now we are starting to see a little bit of bottoming near that 390s. Let's see if we can get back on up here and start reclaiming some of these losses. All right, so we are seeing a lot of mentions in the chat. So I'll go ahead and I'll take some of those stocks before we take a look into the market. Looks like Jonathan wants to talk a little bit about ChargePoint. So let's go ahead and let's dive into a little bit of ChargePoint. Why would ChargePoint be moving? Because let's get towards the headline. Yesterday, we talked about on pre-market prep that Biden had made mentions that they are making moves towards the charging stations. And of course, that's going to be a big focus. That's why people are focusing on ChargePoint. It did do a nice little run yesterday. As you guys can see, it ran there towards 16. But of course, getting hit hard here could find a little bit of some sympathy buyers as we're starting to see it pull back. But one thing that I would point to on ChargePoint is that I'm going to be looking for it to come back on out through the 15s and above 16. Every time we start failing here on this trend line, we want to actually start getting back above this, and really above 20 is where we should get bullish on ChargePoint. That's where we had long-term consolidation that could act as resistance. So if you take a look here on the weekly, you're going to see a little bit cleaner. So I'm going to go ahead and delete some of this so that you don't see all this action. And that was a time when we were looking for it to break on out. But you can see every time this is popped, it has dropped. Popped, it has dropped. Popped, it has dropped. So I want to see that trend change. And until we see that pattern change, we're going to keep watching to see if it actually gets that lift. At least in my eyes, I will keep watching this. We'll see what happens on ChargePoint. All right, let's keep going here. Let's look at some other areas here. Looks like UEC and nuclear energy play, Dustin talking about. Let's take a look here at Uranium Energy Corp. Uranium Energy Corp pulling on back here towards the support. I would take a look at this weekly kind of getting into play here. And you can see here, it keeps holding around these levels. So as long as it can hold that pullback, you'll be looking fine here. Did do a nice lift on up there towards 472 today, but turning around quickly. As you guys can see, it was yesterday where, well, actually it was on Tuesday where we make a nice run on up. That was about 18%. Made that full 100% retracement. So let's see if that support kind of holds here, the 381s. You can see it's holding really well now. Let's see if it gets on back through $4 at the end of the day. All right, so we talked about what was strong in certain areas, but of course, gold and silver, right? Gold and silver were one of the strongest areas of today. If you wanted to take a look at it, if you find some pockets of strength, it was in gold and silver. Why would that happen, guys? I think it's important always to talk about stocks just the same way that I learned of them. So gold loves to run as an inflation hedge. And normally this doesn't work always. I will tell you right now, at least in my trading career, this hasn't happened too often where the actual inflation hedge works, which people talk about it being gold. And you can see it actually is working well today. So let's take a look at that and see what we see on the chart. You take a look, this is the 5 minute, and it actually gapped down to start the day and it's pulled on up here. The industry index here has gone up 6.49% already. So what are some of the leaders in these gold plays? Let's take a look at some of these. So Gordo making a good move up. This is $1.95 stocks, but let's take a look at some of the higher cap ones. That's what I usually do. Look at some of the leaders like Newmont Corporation here, definitely getting a nice lift on up, and enjoying to see that gold is actually playing as a hedge today. Look at that. Wouldn't you know it? GOLD continuing the lift here. And now we're seeing it rise through 21. This is a 4.5%. But if you draw it from the bottom of today's move, that's about 6.5% on up there through 21. We'll see if gold can continue making a move. And another one that I like in this sector is AU. I've traded this one multiple times. As you guys are seeing, this one come on up there to 1750. We'll see if it can continue making that lift. I did see silver mentioned in the chat there by Hertz. So shout out to you, Hertz. PAAS. We'll take a look at it. Silver making a nice lift there today. And definitely one of the leaders right there, PAAS, Pan American Silver, getting that nice lift, of course. Another kind of inflationary hedge, right? And so this doesn't always work out. And I think that's the important part to note here. So you can't just always just rely on this, but there's going to be certain times where this trade will play out and will give you an opportunity like today with the CPI going down, stocks going down. This is a great way to hedge a little bit of your portfolio on a day like today. But like always, determine your own risk. Let's go ahead. Let's keep going through it. Some other plays here. AG making a nice lift here. MAG also making a nice lift here. And then FSM, nice day here, 7.06%. And from the bottom up, this is over a 10% move, 11.8, 11.5%. Not a bad day for Fortuna Silver Mines here. Let's take a look at the daily. Daily action has some good bottoming action around 350s. And it really came from all the way from 325s today. We'll see if it can continue making it through the highs here. You can see here you're going to run into a little bit of a gap zone and some resistance up there towards 371. And we'll see if investors can get it on through and we continue the action. All right, I'm super excited. In a little bit, we'll be getting into another interview with, of course, more experts. That's what this show's really about, is trying to give you guys perspective of what I see out in the market. We're going to cover some headlines. We're going to look at some market movers. And then, of course, we're going to get to the expert opinion so that you guys can continue your informational edge. Like always, guys, if you guys can do me the favor, take a second here. Let's take a second to definitely smash the like button. Hope you guys are enjoying today's first show from Stock Market Movers. I'm trying to do my best handling everything like always, but we're going to keep it going right here. Smash that like button if you guys have been enjoying and at least getting some information. If you got some information, hit the like. All right, let's keep it going. Let's look at what else is moving on out there and where we can see some true weakness. So one of the areas that I called out this morning, and definitely, guys, if you don't have the Benzinga Pro trade widget that's in Benzinga Pro, go ahead and go to pro.benzinga.com for your 2-week free trial. Check it out. I put a trade idea up there every single day. And today's idea was none other than BTU. You guys know how I like BTU. It's a Kpler. I played this one multiple times. I thought it was loading on up for another move. So let's go ahead and take a look at what we saw today. All right, so today I actually played it here out the gates here after we got some bottoming action around the 2550s, getting in here at the 2581. And then the important part was kind of riding it to the trend line and not looking for too much. That's one of the things that I've been feeling this market, you kind of have to adjust. There's certain times when you can go for kind of further out price action. And then there's certain times where we're going to just have to take what we can get, right? And certain times I'm looking for that to kind of come into play. And we're looking for resistance to really come into play. And so a lot of times you're going to see this where you get this stocks going to resistance, but they're not getting that continuation move. That's what I've been seeing lately, at least from patterns. So what does that make me do? Be a little quicker onto the profit side, especially on like a day trade, right? And so we took this up there from 25.81s up there to through the 26 first, took some profits into that 26 because that was just to give us our first piece. Then we looked to really get that next piece on up. We took it out at 26.76, getting on up there all the way. It ended up going towards 27.16. But, you know, that was really close towards that. And a lot of times in this market, you might not be able to get that top reward. So I took it into that move, and that's a great trade for us. That's almost a full point from the 25.81 to the 26.76. All right. So in a second, we'll be getting into our interviews. As you guys can see, BTU is loading up right now, and I'd be paying attention to it like always. Make your own investment decisions here. But if we can get it on up there back through this 26.35, I'd be watching to see if we can get through that 26.50 and then get through 27 on the day. That would be looking good on the daily chart as you've gotten this pullback. And one of the things that BTU likes to do, and you know what, I'm going to go ahead and do this. I usually don't like to do this, but let's go. Let's delete all drawings here. And you can see here how it's holding the trend. This is what BTU likes to do often. If you can see here, it did it for a long time when it broke out in like February. It held trend, and it comes up and comes back down and holds trends. But when it breaks it, of course, be careful. You could get a correction period. But as you can see, it's holding trend also again. And that's what I like about BTU. If we can close this candle into the green, or at least just hold here towards 25.64s, then end up going through 27, we could have that next look up through the 29s. And with higher inflation, oil going up, I would only be guessing that coal also is on its way up. AMR is one that likes to keep the trend, and it has been keeping the trend. So look at this trend line. Keep this one on your radar if you guys are looking for some coal players. Starbucks is the next one that we'll get into. At 1:45, we'll get into our next interview. Starbucks was one of my short calls of today, and a lot of that being with already was looking at Starbucks short, known it's been bouncing with the rally. And then when we start getting the negative catalyst again, these are the names that I'm going to go to that are kind of more they already have that outlook, at least in my eyes, towards the short side, so that when we start getting the market environment to actually go in our direction, these are the first names that I'm going to be looking at. So Starbucks is one of those, and another one that I'll get into just up next is Lucid. So Starbucks, we were talking about it on pre-market prep. It keeps holding around this 80, and when it rejects from this 80, that's where it really broke last time. We got that earnings pop that it happened here, and it was a real gift. It came from above what? It went to 82.87 and then went all the way back down to a low of 68.39. So I'm actually looking for this to really start cracking. If you can draw a trend line here, you're going to start seeing how this is really breaking. And now we want to start seeing it close down here on the downside of this trend line, really giving us that look that it wants to keep coming back down through the support and maybe take out that low that we see on the chart. We'll see what happens here on Starbucks. One of the reasons that I'm so negative on Starbucks, I talked about it earlier with AB, but the reason why I look at Starbucks is that their innovation needs to kind of adjust here, right? And so they brought back their old CEO to bring that innovation. But I'm stuck wondering here, how does Starbucks do this? Another thing that I think Starbucks is going through is the battles of employees trying to increase that wage, right? And then, of course, how do they put back to the shareholders and create some investors' value here? And I think that Starbucks is one of those brands that is struggling here because to me, it's more saturated than I'd like. I just don't see that same fanatic outlook for Starbucks. Of course, a lot of people know the brand as the nearby coffee place, but there's a lot of other coffee shops that have opened up since Starbucks have had this success. So I think competition's finally getting to it. A name that I'd compare to it that got hit with, and dare I say it, the Goldman axe, I'm going to call it, because that's what my man Joel Elconin, shout out to him on Pre-Market Prep, called it today. Goldman Sachs calling a downgrade to sell on Netflix. And this is also a brand that, in my eyes, is just saturated. It's everyone knows about it, and it's gotten to the point where it's just not the sexy name. And when it's sometimes not the sexy name, I think competition really starts coming into play, and then that could really hurt the valuation that you see on the stock. And we all know how Starbucks has a high valuation, $90.3 billion here. Compared to Chipotle, Chipotle is at 38.5 billion. We're talking double that of a Chipotle. And so I think that you're starting to see here the valuation start getting hit, and they're just going to get kind of maybe that lower multiple look. Of course, the Starbucks going to zero, that's not going to happen anytime soon, guys. But I'll keep watching this one. Nice short today. This is called a VWAP fade. If you guys like some strategies, some day trading strategies out there, a lot of times you'll look for some downside action, a move back towards VWAP, and you're going in off of that VWAP, looking for low of the day breaks to take profit into. As you guys saw, this happened right out the gates. We nailed this one, but you could have nailed the second move too, as it goes back to VWAP. Boom, right back through that low of the day, and you get those breakdowns. This happens often, and a lot of times you'll even get a third touch and then another fade. But of course, that's a complete pattern there, and what you're getting there is more of a bear pennant, and so you got to pay attention to see if that completes. That's going to be definitely one of the ones that we watched today, and Lucid was another one, guys. Full disclosure, I still have a piece of Lucid, so I'm kind of watching this one to see what happens, but we'll see. I'm still pointing towards the downside right now, just because I feel like the valuations don't match. This is a $32.4 billion company compared to NIO that, has a lot of deliveries, right? And so if you want to look at market cap comparable, that's probably the closest comparable. And so in my eyes, I just don't see these companies as matching up, at least in the moment being. So I'm going to continue to look for that downside. Of course, Tesla struggling today, even though Elon tweeted out, he talked about the FSD beta coming out in the next 2 weeks. He tried his best. I think so, but it doesn't look like Tesla is wanting to turn around right now. UBS put out that 50% upside potential, though. And I mean, from that level, what are we down already? We're down about 4%. So we'll see what happens there. They definitely see the upside. They put a price target out there, I think, of 1,100. So that's a pretty high price target up there. We'll see what happens in Tesla. All right, guys, it's 1:45. You know what that means. It's time to get into our next interview. And what we're going to do is always try to touch different areas. We just touched some oil stocks. So now we want to go ahead and switch it on up. We're going to get into an interview here with Ivana Delevska, from portfolio manager of actively managed SPIR Alpha ETF. And the important part here is that I really love how she approaches her investments. She's very theme oriented. So let's go ahead. Let's talk about some themes and see what she saw in CPI data. How we doing, Ivana? Oh, it looks like I can't hear you. If you could do me a favor, just look at the settings. There's a little wheel bar at the bottom there, and just make sure your audio settings are correct. I'll put you in the background for a second so you can just check that. You can give me a thumbs up if you think you got them right. All right, so you can maybe got that fixed there? No, can you hear me? I'll bring you in the background. No worries. We'll figure that out. Just go ahead and check the wheel setting down at the below if your audio settings are set. If not, you can contact me in the private chat here. Let's go ahead. Let's keep it going. I'll talk a little bit about what we're going to talk about coming on up here, and what are the questions going to consist of? One of the questions that I really want to talk about is what's going on in tech, right? And if we're really going to, if this is the opportunity now, or should we start kind of keeping a watch out here? Go ahead and you can give me a thumbs up if you feel that you got the audio fixed there. I think she's going to come right back in here. We'll check on that. No worries. I'm going to hang tight here, guys. So one of the things that we want to talk to is about, of course, our tech and to see how we can bounce back. Is this the time? One of the things that we've been looking at is CPI data really coming in and hitting hard on tech. If you take a look at the Qs today, they took a real hard beating. And they're down there towards 290s, really close towards those lows over there at the 285s. And we got an all-time low of 280s right now, at least for the year. Let's go ahead. Let's try one more time here. Let's see if Ivana got it fixed here. How we doing?
I think this should be working now.
That works better, at least. I can hear you perfectly. Right. Can you hear me?
Yep.
Hey, let's go ahead. I'm super excited to have you back on. I've had you on Money Mitch. Welcome to the first ever Stock Market Movers, and thank you for joining me.
Thanks for having me.
Of course. Let's go ahead. Let's dive on in. First things first, I know that you probably were watching it too. What's your reaction to the CPI data?
So big surprise to the upside, both on core and total inflation. The core inflation we're not so concerned about because we track the economic data points underlying it, and we can see that they're really easing. So it will take some time for this to get reflected in the actual data, but that's something that we're definitely watching. And then the total inflation with commodities doing what they're doing, we don't really see that easing anytime soon. So it's going to be tricky because on one hand, the Fed wants to fight inflation with higher interest rates, but it's unclear how much rates can really do to slow down commodities. So we're really at this period of time where people are selling off growth stocks on the expectation of really high interest rates, right? But the Fed is really the Fed has their hands tied a little bit here. So we'll see how much they're actually able to do.
Yeah, I don't even call it tied. I call it handcuffed because
yep.
that's what I feel like they are. And they're kind of tied to the chair right now. They're handcuffed to the chair and they can't let go right now. And a lot of people were watching to see if there were maybe just a little bit of the peaking, right? That's what I was kind of paying attention to. But yes, definitely a hot number coming on in. And with that, we saw the reaction today. So definitely some continued downside action. Now, one of the things that we'll go to you now on NVIDIA here. Are we still seeing kind of NVIDIA as kind of the leader here? And is this an opportunity for NVIDIA versus something that we should be running away from?
Absolutely. So we're using this tech sell-off as an opportunity to add to industrial technology names. We see a big bifurcation between consumer tech and industrial tech. So during the last cycle, you saw a lot of this, whether it's online streaming, whether it's home delivery, those were really the technologies that were driving the last tech cycle. What we see going forward is that technology is going to become core of enterprises. And that's really going to drive the next tech wave. And we think it's going to be even larger than the previous cycle because it's going to really incorporate all industries. So NVIDIA is just one example of a company that's been able to really broaden their exposure into enterprise technology. So people usually think of it as a chip stock, right? As providing chips to gaming. But the data center became even a larger part of their business than gaming, and this was the first quarter that occurred. So the growth here is going to be driven more by enterprise spending and data center than gaming or consumer technologies. So one thing I would say is that all companies that we cover provided pretty measured tepid guidance. So that's another thing we like here is that NVIDIA brought their guidance pretty conservatively down to only growing 24%, I believe, for the next quarter, compared to 40+% previously. So the setup going forward for a lot of these names after they cut guidance, it's going to actually be pretty pretty favorable. And we like the names that cite China as a concern in their guidance cut, because China, we already know that it's getting better and it's reopening. So if anything, that should be an area to look for strength rather than weakness. So whoever has cut on China, now the US could come in weaker, but maybe China could surprise to the upside in the next 2 quarters.
Yeah, I would strongly agree with that. That's one thing that I've been starting to watch, and more I've been talking on here on Benzinga, that we can't always sometimes just focus all about just what our market's going through. China's been going through this for a while now, and
Yep.
this could be the signs to a turn. We've been seeing definitely some greater headlines and some positive catalyst flow coming out of China. So are you kind of seeing that too, some strength in China right now?
Yeah, absolutely. We're seeing it across the board. We track more the industrial side, so we saw pretty good guidance from all the EV auto manufacturers. That was a pretty big positive, and it's a good kind of barometer of the broader economy there. So yeah, going back to your commodity discussion, right? Like we think China is going to be a big driver here that people are not necessarily appreciating. So if you see growth, China is the biggest importer of oil, right? So if you see any sort of green shoots from there, like that's really going to translate into further support for commodities.
Yeah, we talked about the reopening play here in the United States for so long, but there's going to be a reopening trade there, probably more than likely. So
yeah, you're almost seeing like 100% the reverse of, we already had the reopening trade here, so now we are almost in the phase where we're like all the companies that were hurt during the pandemic, like airlines and restaurants, are seeing better results versus the companies that benefited from the pandemic are now giving up all their gains. I think in China it's going to be exactly the opposite.
Perfect. Now, one of the things that I have to ask you, and is there any theme that are looking strong here, looking forward?
So the way we're positioned is we keep adding to high quality technology. We're long-term investors, so that's a little bit different. You have to take that into account. So we're trying to find good businesses where companies are growing at pretty high growth rates, but are also generating free cash flow. That's a big deal right now, right? So if you can grow, like NVIDIA is an example, right? Like they grew 40+% on an LTM basis. And they're still going to grow 25+% going forward with 40+ margin. That sounds pretty good to us. And we have similar examples, like CrowdStrike is another example. They're growing 60+% and they have positive operating and free cash flow margin. So I think that's really the sweet spot to add on this pullback. So that's definitely a theme we have. And then we like the energy security theme. I think beyond oil, we try to stay away from the large commodities just because they're so dependent on the economy. We really like nuclear. It's one where the cycle is just starting to get underway. The industry has been totally out of favor for the past 10 years since the Fukushima disaster. So we think that's a trade that's really coming back. And the US just announced a few days ago that they're planning to add to enriched uranium reserves. Utility inventories are at all-time lows. People have been really using up their inventories to overfeed the enrichment plants because it's tight capacity. So that's another theme we really like here.
That's truly interesting. I got to say, I'm definitely going to be focused on that one too, and check out some little bit more research on that. Viewers out there, check that one out too. I think that's something to definitely keep your eyes out open to. Now, one of the things that I definitely want to talk about, is there any new holdings that we should be excited about for SPRX?
So chemical was a relatively new holding for us since few months ago. We're definitely very excited about that. And then we've just been basically, like, what we do during downturns is we'll concentrate our positioning. So we're increasing the positions in the high conviction names we have. So those would be like NVIDIA or Snowflake. that's basically, or CrowdStrike. We love cybersecurity as a team. I think that one is kind of flying under the radar because it's both growth, right? So companies are selling off on that basis, but the fundamentals are actually improving. So we have few companies that we like in that space.
Yeah, definitely. CrowdStrike, one definitely to good mention there. We'll take a look deeper into that. And cybersecurity, I don't think is going any way anytime soon. If anything, we're using more and more online. So definitely a theme to look forward to. Now, where could our viewers find you if they want to learn a little bit more about what you do?
So we publish research on our website, spearinvest.com. I just joined Twitter, so I'm trying to get followers on Twitter, so follow me.
Hey,
And,
guys, get the follow right there.
So I've been trying to post a bit more timely type tweets related to industrial technology, and we also send out weekly updates there posted on Medium as well. But if you want them in your inbox, you can just subscribe on our website. It's completely free.
Perfect, guys. Well, you guys had it here, guys. The interview with Ivana Delevska, the portfolio manager of actively managers Spear Alpha ETF. I love the name. I love the alpha in there. Alpha is such a good word to have. So we'll definitely be looking for some more alpha from you, Ivana. Thank you.
Sounds great. Thank you.
All right, guys, let's go ahead. We're going to go ahead and wrap on up here in about 2 minutes, but let's take a quick look into the markets and see what we see right now. Are we finding that bottom a little bit? We went to the VWAP, started coming back down. We'll see if we break through this price range that we have multiple bottoms in around the 390s. Definitely don't want to see that leak out towards at the close. But of course, if you want to go ahead and learn more about what is going on here, and if we continue to leak down, don't miss me on At the Close. I'll be on in just, what do we got? An hour and a half, guys. Come and check me out with Joel Elconin on At the Close. We'll keep it going. Stock market movers today. I hope that you guys enjoyed today's first show ever. And definitely smash the like. Give me some love if you guys enjoyed it. Hit the comments after. Tell me what you guys think of the new show. Should we keep it? Get rid of it? You guys are the determining factor, because at the end of the day, we don't do this for myself. We do this for you guys on out there. So let me know what you guys think in the comments after the show. I'm going to go ahead and wrap on up. We'll see you next time right here. And like always, hit the like button and let's keep working on our skills to get better.